We are all set to move forward with our next session for the day, which will start with a presentation by one of our panelists. Our next and the final session is the plenary session 5, Micro Insurance Models. Insurance and microfinance plays an important role as it ensures the lender in the event of death of either the borrower or the co-guarantor is taken care of. Secondly, it also covers the family vulnerability. Do we have adequate models to look at both these aspects? Is this the only reason as to why the microfinance companies need microinsurance, or should they also be looking at social benefit framework for their borrowers, low cost, health insurance, disaster insurance, etc.? May I request our session moderator, Mr. Manoj Sharma, Managing Director, Asia Microsave India, along with our distinguished panelists to kindly join us here on stage. The panelists, of course, comprise of Ms. Mayes Dawat, Chairperson, CARD Pioneer Microinsurance Inc. Philippines. Ms. Sophie Pam, Head of Deposit and Branchless Banking Product Development, Angkor Microfinance Cambodia. Mr. G. Satish Raju, Head Global Partnerships South Asia, Swiss Reinsurance Company Limited India. Dr. Ajay Verma, Head Rural and Non-Traditional Initiatives, Future Generali India Insurance Company Limited India. And Mr. Ashutosh Mahajan, Zonal Manager, Bajaj Allianz Life Insurance Company Limited. Mr. Neeraj Maheshwari, Senior Vice President and Head, Group and Partnership Distributions, DHFL Pramerica Life Insurance Company Limited, India. Ladies and gentlemen, can we have a round of applause right here for all our panelists and our moderator? And we would like to start this session by a presentation by Mr. Ashutosh Mahajan. Sir, if you could kindly.
Good evening, everyone. Great to be here. This presentation is about Bajaj Allianz Life Insurance Company and how we have scaled to this level and what are the challenges that we face, and we look forward for your support. As our Honorable MP said today in the morning that the credit facility should reach everyone, so same the insurance facility should also reach each and everyone, right? On this basis, I would like to tell you that Bajaj Allianz, we have insured more than 19 crore lives. And in 2016 year itself, we have settled more than 2 lakh claims. And this makes us one of the biggest player in micro insurance. Bajaj Allianz is as well known to each and every one of you. So that is the thing. And how we could do it is because of the strong financial background that we have. The strong financial background of ours is seen by way of 771% of solvency ratio against 150%, which is required by IRDA or which is considered as healthy. So this is the main reason why Bajaj Allianz can settle each and every claim, and the claims that we settle, it is settled in less than 7 days for maximum of the partners. The way forward is that now we have to, since we have insured the loan portfolio of maximum of the MFIs by way of our GTL and JCB products, now we look forward to penetrate further, and now we look forward to have a look at the saving habits that has to be inculcated amongst the rural population, the rural customers that we have. And the challenges that we face basically in this is the technology, because the technology, it's a very costly thing. The product development that we have to do, that has to be very, very simple. It has to be cost effective. The services has to be good. So we face a lot of challenges, and the biggest challenge is basically the regulatory challenge. Because the products that are given by the MFIs, these are of all 1 year, 2 years, and now a few of the MFIs have come up and asked for 3 years products, wherein the insurance regulator says that a saving product has to be minimum of 5 years. So with this, all issues, we are moving ahead, and we seek everybody's support in this. And as a sector, we want to do insurance inclusion after the financial inclusion. Thank you.
Thank you, Ashutosh. And we have been asked to talk about microinsurance models, especially with relevance to the microfinance sector. We have a fairly large and experienced panel here, including experiences from Southeast Asia. We have May from the Philippines, and Philippines is one of the markets with very large penetration of microinsurance products. And similarly, we have Sophie from AMK in Cambodia, which has just started a pension product. And then India per se has been a fairly strong credit life market in terms of microfinance. And the panel that you see here brings in that experience around both in terms of the products, the delivery channels, and also kind of the whole product development process for this very vulnerable, but at the same time very difficult to deliver sector. So rather than going into details of different models, I mean, as I said, one of the models that is being used in India is the credit life model. In the initial days of the microfinance sector, there was some work going around the self-insurance models which MFIs were running. Then, of course, you have the mutuals model, and May will talk about it as we progress the panel. There has been some work going on, not so much again in India, but let's say neighboring Bangladesh has done extremely well in some of the credit-based model, some of the mobile phone-based models of delivery of insurance services. So what I'll do is we'll talk about very briefly about products, channels, look at some of the international experiences, and how these can link up to the microfinance sector in India. Ashutosh has given a sort of an outline around what Bajaj Allianz does in terms of its outreach into the microfinance sector with its low-income products. So I will sort of invite Neeraj Maheshwari from DHFL Pramerica Life Insurance. And Neeraj, can you tell us about some of the futuristic channels that you see evolving for microinsurance, and how can microfinance institutions leverage those channels in actually trying to reach the low-income segments?
Okay, so I'll just give you, I think, the little background what we have done, okay, and then how we can really scale, for the new distribution channels in future. Today, if you look at it, I would say, in India, if you exclude the PMJJY and PMJVY, you're more than, I think if you exclude that, more than 90% volumes come from microfinance institution, okay? And SFBs, so earlier which were MFI, now SFBs. So these put together contribute more than 90% lives covered in India today, and that's banking. So first of all, yes. So I would rather say that, yes, we need to explore newer channels. But having said that, we also need to explore the existing distribution channels, which lies with us. So just to give you an example, today we haven't explored the cooperative to an extent, which has got a base of more than 150 million customer base. We haven't explored the regional rural bank distribution channels for micro, which has got, again, the customer base of more than 200 millions. For that example, be it public sector bank, be it dairy boards. So are these members 100% covered? Then I would say no. So that's an existing aspect. Then I'll talk about the future aspect, futuristic distribution channels. If you look at the global micro insurance customer today, the 25% of the lives, they are being covered through the mobile network operators. They are the mobile customers. In India, if you look at it, so we are the country known for more than 1 billion mobile connections. How many are really avail the mobile insurance facility? Then I'd say the penetration is less than. If you really they're currently a voluntary basis. And if you look at the life and non-life ratio, I think they're largely covered for the general insurance. And the penetration for the life insurance will be less than 2%. Against the worldwide coverage, which is penetration of 20-25%. So I think one, we really need to explore the mobile as a distribution channels. The secondly, we have also not, touched one of the very critical, which are the population channels, popular channels, which are like, your affinity groups, which are your community-based organizations, which are quite popular, your agri-distribution companies, which are also very popular, your prepaid card, right, which is like retailers. So you can, India is known for its, huge distribution retailers channels, which is also not yet explored. So these are the futuristic, but having said that, we need to also explore the existing distribution channels to the extent.
Thanks very much. I mean, we were just discussing as the pre-panel discussion outside, and I mentioned that if you look at the whole bancassurance delivery channel, the government through its Jan Dhan Yojanas managed to enroll 132 million people under the different Jan Suraksha Yojanas. And that was fine. I mean, you have a government push program and outreach is always massive. But the fact that 80% of the people re-enrolled after a year in the insurance programs was quite a sort of, it was a wow factor for us, that we never thought that a government push program would get to an 80% people renewing their insurance after a year. And to some extent that also tells us that when we did a research recently with Jan Suraksha clients and we asked them, why did you open the Jan Dhan accounts, more than 30% people said that we opened the Jan Dhan accounts to get the Jan Suraksha Yojanas. So we opened the bank accounts to access insurance. And from the low-income segment in rural area to be getting such a response was actually quite heartening, because the understanding of insurance is much more than probably what we seem to think. And the risk cover that it provides, people are quite keen to get it. I would sort of quickly jump back to Ashutosh and ask him to talk very briefly about, as he goes about on, or as insurance companies go about on the whole product development path of micro-insurance product, what are the challenges you face?
So, like basically when it comes to the product development thing, the MFIs or typically the rural customer, they need absolutely simple products. Why? Because 95% of the people are semi-educated or illiterate. So an insurance product, it is very imperative for them to understand. If they don't understand the product, then we face further consequences, like a lot of surrenders come, a lot of free looks come, which is not at all a healthy sign of an insurance company. Then second thing, when we develop a product, we also need to ensure that there is insurance education, because insurance as such is traditionally a push product. It has never been a pull product, at least as far as India is concerned, right? So when we design a product, the product has to be simple. The tenure of the product, traditionally there are products which can like go for not less than 10 years. But like for this micro insurance products, or when we speak of the products for the rural customers, the tenure has to be also less. The servicing of the customers are spread across country in the rural villages. So the cost of distribution is also very high. So we have to take care of that also. So what we need is basically the product has to be simple. The servicing has to have a technological support, so that there is a cost-effective thing. Then third thing, when we go to the rural places or villages or even the poor areas in the urban country, we see if there is one case of disgruntled or wherein the customer is not satisfied, the word of mouth spreads like fire and the insurance company ends up paying for the consequences. The consequences are there for the insurance company. So these are the challenges. So like broadly what I can say is there is a technological challenge, there is a simplicity challenge, and insurance awareness, cost effective things. These are the four things which I see are the challenges which we together have to come up and find solutions.
Philippines has been one of the countries which has achieved a sort of penetration rate of a microinsurance penetration rate, which is really top of the world in terms of they have a 22% penetration rate, which is really, really good. Some of it has to do with the absolutely unique model that the Philippines has in terms of the mutual benefit associations and the regulations that enable mutual benefit associations. So since we have May from the Philippines, and CARD is the largest microfinance institution and microfinance bank in the Philippines, it'll be good to get her perspective around the whole MBM model, how does it work, and also the enabling regulations in the Philippines that have allowed something like this to take off and get to scale.
Okay, so in microinsurance MBA model, we work with our partner organization, particularly the microfinance institutions, banking institutions, and cooperatives. So in this model, this partner organization act as our agents who administered the microinsurance activities starting from the marketing, promotion, selling, enrollment, up to the claim settlement. So the heart of our operations happens in the center, meeting, and branches of the microfinance institutions. So in this type of model, we operate cost-effective because we just pay a small amount of service fee or commission in some other insurance companies. So the beauty of this microinsurance MBA model is this is wholly owned by the members. So 100% of this association is owned by the members, and actually the board is composed of the members who knows the needs of their co-members. So basically, they can easily formulate policies to address the needs of our members. And Card MBA pioneered the claim settlement model. This is popularly known as 135 model. So in one day, we can pay claim because we know our client by name and by face, because of the frequent visits and meetings of the account officers. And in 3 days, if there's questions, and 5th day, there should be finality on the claims. And part of the, because of the growing needs of our members, particularly on the non-life side, like disaster insurance, part of the business strategy of Card MRI is to establish an insurance agency. So now we have an insurance agency, and also we have a joint venture with one of the top insurance company in the country. This is the provider for our non-life insurance products. So I have mentioned already the disaster insurance and crop insurance, and to complete the insurance needs, other traditional insurance like personal accident and motor insurance is being provided by this insurance company. So in terms of regulation, I may say that we are very fortunate because we have a very supportive regulator, just like the microfinance side. We work very closely with the Insurance Commission, and they really support our policy advocacies. So I say this because I think in Asia, only in the Philippines, you can see the provision of microinsurance and mutual benefit associations. In 2006, the Insurance Commission issued a landmark circular about microinsurance. So they defined the microinsurance and the related regulations about microinsurance, and they introduced the microinsurance MBA as a distinct service provider for the low-income sector. And after that, several policy pronouncements have been made, such as national strategy for microinsurance, regulatory framework for microinsurance, and recently, 2015 and 2016, the Insurance Commission issued also the regulatory framework for micro agri-insurance, micro pre-need, and micro health. So I think all of those, we can really say that they really support the microinsurance industry. And just to share with you, the contribution of the microinsurance MBA sector in the microinsurance industry, in terms of insured individuals, we contribute 61% of the entire microinsurance industry in the country, and in terms of premium, it's 54%.
Impressive. I mean, Southeast Asia has really consistently done well in terms of the landscape around some of the more evolved products, both on the microfinance side and also, I would say, on the insurance side. Backed in a lot of cases by very enabling, as I said, regulations. And somewhere it's been a more fertile market, let's say, for innovation around products, and both in microfinance and in insurance. And on that note, let me jump to Sophie, who comes from AMK in Cambodia, again, the largest microfinance institution. And for us, what was very surprising was that a few months back, they approached us and said they would like to develop a pension product. Now, for a microfinance institution to be targeting a pension product and developing and managing the pension product on its own was quite a story. And I think we should sort of look at these longer term products, which incidentally also has inbuilt insurance in it. And let's hear from Sophie on what is this product about, and what was the thought process behind developing this product, and what can we learn from such an initiative by a microfinance institution?
Thank you. Actually, there are some reason behind that. That's why we come up with pension fund product, because we want to filling missing gap in the markets. To assist pension fund scheme in Cambodia, unless you are government staff or you are employee of some private company. If you are from the poor group or one informal economic colleague group, you cannot access or you cannot afford to have to benefit from pensions fund scheme from the government or from your employee. That is the reason that AMK come up with this idea, and we develop the product and to offer to the client at the markets. Yeah, that is the reason one. And related to the product feature, we try to encourage our client to buy the product. So we offer the interest rate, that is the competitive interest rate for long-term saving. And we also provide them the contribution, we call matching contribution, which encourage client to deposit more and regularly. So whenever they get they deposit, they will get a matching contribution in additional to the interest rate. And then another one is we equip with a personal accident to the beneficiary. So if something wrong to them, they can benefit from the insurance cover. Yeah. And anyway, just add a little bit on in terms of regulatory. Unlike Philippines, we are not friendly to provide a microinsurance or insurance service to the client as the microfinance. So if you want to provide microinsurance to the client, unless you apply another license or you are insurance company. So in order to provide service to the client, we need to partnership with the insurance company. So we pay premium fee to them and then to give benefit to our clients. Yeah.
And I understand that the product is still at a pilot stage, but any initial reactions from clients in terms of their liking for the product, their subscription to the product? Or
yeah, actually, in terms of pilot stage, we have a stage first and second. Right now, we take it for the informal economic colleague group, which in the town. So far, so good. There is no any reaction yet, but we'll see when we move our pilot test into the rural area, which pension fund scheme is something new for them. So we wait and see whether something we learn from our client and require to modify our products. Yeah.
That's very, very interesting for us to be looking at an MFI institution developing its own pension product, offering it to the clients, and then bundling accident insurance with it. So while the Indian microfinance sort of sector has been, as I said, more about credit life, there have been innovations going, and Future Generali has been one of the institutions that has been sort of looking at a health insurance product and then using microfinance channels to be able to deliver it. So I'll just go across to Ajay Varma, and if you could tell us about how the product works and how are MFI sort of responding to it, and how are clients engaging with the product?
Ever since the birth of Future Generali about 10 years back, we focused on health insurance, and in particularly micro health insurance. And micro health insurance product, which we thought is the need of the hour at that point of time and today, and is going to be in future as well. So this is what we had a very clear concept that even in the new startup company, this is the product of demand. Now, we tried different products, we tried different channels, various channels, and we found the microfinance institution channel is one of the very suitable channel for reaching out to the masses, reaching out to the needy people, and we can really service to the poor. Now, the important thing was what is the fit component? What is the fit product? There are many challenges. Ashutosh has described many challenges which are still there. We tried to, after doing some learning, we figure out that the benefit type of product, very simple to communicate to the end user or the MFI's customer, is the core of everything. If the product communication is done clearly to the illiterates or very little literate persons, then the product is going to be successful and it is going to be picked up by the market rather than pushing by the market. So we design a product, benefit product, and with one of the MFI institution, we are working in the last 2 years, when in the first quarter of January, we enrolled only in hundreds people. Now in the first quarter of 2017, we enrolled 50,000 customers. So this is the way we accelerated the growth of enrollment of customer for the micro health insurance product. What we thought, the product simplicity, then the certain feature which is very essential and in the health segment, invariably is a bone of contention is the pre-existing diseases. What we did is we covered pre-existing diseases into that. Then the another thing which came into the requirement is the maternity cover. We added into that because the 99% population of the microfinance institution is women borrower. So that was the need of the customer segment. Since the women are covered, naturally they are going to cover their family, their spouse and their family members. So we covered pre-existing diseases, we covered the maternity with or without 9-month waiting period. Very little exclusions. Another thing which we thought and we find that there is a lot of exclusion, people do not like it. We removed all exclusions, very few exclusions. Then the important thing was it should be affordable. It should be within reach. We made it very cheap. Cheap not in terms of the product quality, but in terms of the pricing. How it will work? It will work only when it is done in the large masses. The price is bound to come down. So who will start? So let us start with a fair price product, and it will be picked up very well by the market. And it has picked up. Then another thing was for MFI institution, the process part. Process simplification was another important thing which we designed. Because the product is fine, communication is fine, but the process for MFI, they should buy it. The MFI institution should not feel it is going to be a problematic for them. So the process simplification was also very essential, and in that case, technology served our purpose. Then the joint publicity with the MFI institution, we did various health camps to make them aware about the health and health insurance requirement. And it was a success for both of us. Then what happens is who is the ultimate seller for the customer? The last mile loan officer of the MFI institution. Unless he is accepting it, yes, it can be sold. He should buy the idea, yes, this is the product which we can sell to our customer to whom we are giving loans. So motivation he requires, and motivation as well as competition. Among the lot of young loan officers, they need motivation. And we did all possible things where they can be motivated to sell the product. And one of the important in success of this micro health insurance product was the after sales. If the sales is not there, it is not going to be repeated. Nobody is going to buy the product next time if the sales is not there. And as you have heard from the earlier speaker, that word of mouth publicity goes very in a very speed way. So after sales service focus was very essential, and we focused in this area from the day one of the product distribution. So this is the way we succeeded, and now many of the MFIs are going towards this product, which is the demand of the market.
I mean, health insurance is considered to be a very high engagement product. And if you are able to leverage microfinance institutional channels to be able to deliver this product, I think it's definitely something that MFIs should look at, because it's definitely needed. I mean, one of the key risk events we all say happens at the low end of the market is our risk events. So if somehow we can cover them and create processes and systems to be able to deliver such a product, and if you could have diversity around products from other providers, I think it would be a fantastic product to add to the portfolio of microfinance institutions. But I now move across to Mr. Satish Raju, who's representing Swiss Re, and it's a very large global reinsurance major. And while on the pecking order of the insurance value chain, I think reinsurers sit somewhere at the top because the entire risk gets pooled at their level. But my question to you, Mr. Raju, is that how can a company like Swiss Re help microfinance institutions protect their balance sheets from, let's say, major risk events?
Yeah, thanks, Manoj. So I think as MFIs, we're all familiar with the likes of credit life or health insurance for the customers of the MFIs. So I'd just like to bring in a different angle, which is I think the MFI itself needs to be as healthy or in a as healthy financial state as its own borrowers. So let me take a couple of examples to illustrate what I mean. And Manoj, you were just referring to the Southeast Asian region being a very fertile ground for innovation. So what Swiss Re did last year with 3 MFIs in Indonesia was to develop sort of what we call as a parametric insurance product for protecting the balance sheet of MFIs from the risks of earthquake. So Indonesia is very much earthquake prone, and the product is very simple. So you don't really look at what is the actual damage caused to, say, the property of your borrowers, but you simply say that as and when, say, an earthquake of magnitude 7 strikes Indonesia, an amount of, say, $10 million gets released to the MFI. Or if it is a higher magnitude, you can release a higher amount of money, say $20 million for the same, for that level of earthquake. So what this does is, it does 2 things. One is immediate liquidity assistance to the MFI, so that it's at the discretion of the MFI to choose what it wants to do with these funds. You want to push back loan installments of your affected customers by 3 to 6 months, you can do that. You could also use this additional capital to actually provide further loans to your customers to start rebuilding their homes that have been damaged by earthquake. So you could replicate this in India. If you as an MFI have, say, a portfolio of 100 crores in Uttarakhand or, say, 50 crores in Gujarat, which are both earthquake prone, you could do something very similar. And the beauty of this is you can choose not to buy the entire cover for 100 crores or 50 crores, but say you think you can do with 10 crores, you buy just 10 crores. So to that extent, your premium is also manageable. And the same kind of products can be done whether for cyclone protection along the east coast of India or flood protection in urban areas and so on. The second example I want to take here is from Africa. And while I was talking about institutional balance sheet protection, by the way, I mean, just to round off that point, I think it's also important from a credit rating point of view, because rating agencies are increasingly looking to how your balance sheet is protected from the impact of natural disasters. So if you have this protection, perhaps in future your cost of financing could also come down. So just moving to the second example very quickly, in Kenya, we did a product based on satellite imagery to map the amount of vegetation which is affected by drought. And this was used to launch a product for livestock herders, poor livestock herders or pastoralists in Kenya, so that because their income is dependent on the level of vegetation or fodder available for their livestock. And this was an index-based product. Very interestingly, we tied up with M-Pesa, And in February of this year, there was actually a claim payout based on the level of drought that was experienced in Kenya recently. I think around $2.5 million was released in all to some 14,000 livestock herders. And interestingly, because it was M-Pesa, the money was immediately credited through their mobile to their bank accounts. So I think there are interesting products that insurers and reinsurers can bring to market. Earlier, I think there's already been panel discussions on technology and banking as well. And we are exploring various options, looking to the future, even talking of how blockchain can be used to, facilitate claims payments and so on. So while insurers are often sort of relegated to the back end, including having the last panel discussion of the day, I would encourage you to just also, bring in insurers upfront into your entire sort of planning process and see how you can use them to improve your risk management and financial protection. Thank you.
Thanks, Satish. I mean, absolutely agree. As I said in my opening remarks, that for us it was quite an eye-opener that 30% plus people accessed a bank account because they needed access to insurance and not the other way around. We always somehow presume that insurance is just another add-on happening. So and that's a question we sort of keep throwing back at the microfinance sector, that should there be a greater sort of insurance distribution play happening through the MFI channels, both linked to probably the government's insurance programs and also to the plethora of private sector products that we now seem to be having. I mean, when India started down the whole micro insurance play, it was largely credit life. But today, if you listen to the panel of speakers we have from India, you see there's a fairly large bouquet of products available. And if we move across to Southeast Asia, of course, there is much more happening there, which probably shows us the path that microfinance in India is also going to embark on at some stage of evolution. So I'll sort of stop here. We have 5 minutes. We have been a very, very well-behaved panel. So if there are any questions to any of the panelists, please feel free to come. We're not going to allow you to leave. So anyway, you might as well use the opportunity and ask a couple of questions. If you don't, then I have a few. So not going to let you go quite so easily. So while you think it over, one of my questions has been that, yes, please.
Sir, this insurance now, our Prime Minister's scheme now, 30 rupees and a Mediclaim, all those things with small 300 rupees you are getting. Whether this august body can take a call that every member, maybe now 40 million members, they are telling human members, means it's 80, maybe 100 million we can count roughly. Some method everybody can cover now. Nowadays, this medical expenses and other things, since it's an insurance session, I thought it will help. If some kind of a arrangement with, somebody can, it's a CSR effort or anything. Yeah, the money is very meager, but the benefit to the people are huge, instead.
Yeah,
please.
I mean, that's a great thought, and that's what we are here for, that if insurance could become a larger portfolio, because microfinance institutions have a tremendous delivery channel. I don't think any other channel, despite us actually talking about digital channels quite a lot, have the outreach that microfinance institutions have managed to build over a period of time. But that leads us to probably the last question, and any of the panelists can answer, that how is mobile insurance working, and why is it that in India we saw some explosion happening in one of the deployments, but really mobile insurance hasn't taken off quite the way it has, let us say, in neighboring Bangladesh or even in Pakistan with Bima and so on.
So, Manoj, I would like to take up that question basically. So, if you look at it, why mobile insurance is not successful in India, the simple reason is the regulator. Okay, so we do not have a product flexibility. Okay, so mobile insurance, the products are a monthly products, mostly across the market, they have monthly product. The second, the more important, in the African or other markets, they allowed, the premium to be deducted from the airtime. Okay, that's the actual mobile insurance model. In India, neither the TRI or the IRDA, so one, the TRI has to allow the premium to be deducted from the airtime uses. Simultaneously, IRDA also needs to allow a monthly product. However, IRDA doesn't say no to monthly product. We can manage it, but the TRI doesn't allow you to deduct the airtime uses. So that's the time we are not able to take up the mobile insurance very well in India.
Yeah, regulator is a good fall guy to have, and probably insurance companies should talk to MFIN if they can somehow bring IRDA and the Telecom Regulatory Authority together. Incidentally, we recently did a paper around having common KYCs for banks and telecom, and the guys who had asked us to do that, we thought there's no chance in hell to get the telecom KYC to be used for opening a bank account, but it happened. So the issue has also been about engaging with regulators. And I think if we engage with regulators, then something like a mobile, a powerful tool, we could potentially leverage that to offer insurance to a wider segments of clients. With that, I would like to say a thank you to all of you for tuning in, for listening in, and to this very, very diversified panel, both in geographic terms and also in terms of the products and experiences that they brought to this panel. So on behalf of MFIN, on behalf of all the members of MFIN, thank you so much.
Thank you very much, sir. Ladies and gentlemen, that was the last panel, but the day doesn't come to an end right here. We would like to thank all our panelists, especially our moderator. I'll request Mr. Jay Tripathi, member SRO team MFIN, to kindly present a token of our gratitude to all our panelists here on stage. Once again, thank you very much to all our panelists on stage. Ladies and gentlemen, if you can please put your hands together one more time for all of them. I will request Ms. Jamuna Varghese if she can kindly join us on stage. Let's have a round of applause for ma'am, please.
I know it's been a long day for everyone. So this is really not going to be a session. It's just going to be a very quick interaction. We'll just spend literally 10 minutes, not more than that. 10 to at the most 15 minutes. It's not going to be a long session. This is really primarily about MFI growth. And, there's a lot of talk of the digital way. And that's what really we are going to be talking about. I have with me my colleagues from PwC. Ankur is here, and Dinesh, who heads the corporate finance. He is on his way, so he should be here too. And we have my other colleagues who are at the table there. So we could take a lot of things offline. We'll be very brief because we know that everyone's tired and it's dinner time. Yeah, so this is a brief of how the financial services landscape in India is today. We have the banking sector, we have insurance, mutual funds, and others. And of course, we have all the disruptors whom we've been talking about. It's yet to be seen really what is going to be the impact of these disruptors, but we have a whole host of them. And that's really what we are going to be talking about for the next 10 to 15 minutes. MFIs, of course, have been facing quite a few challenges. I won't go into that in terms of the cost of outreach, the access to formal funding, adherence to reporting requirements, risk management, and portfolio quality. So really, what's the future looking like? So the path to growth for MFIs areas to focus on, really, we are looking at multiple and digital products, digitization of collections and disbursals, partnerships to accomplish this, digital data security, and funding. And this is really going to be critical for MFIs to either grow or go in the direction of becoming like small finance banks. So these are steps which actually we found when we looked at the small finance banks and what they did like a year before, once they got the license, the pre-license, and actually got into operation, that these were the things that they started doing. And what we would urge is for MFIs not to wait for their small finance bank licenses, but really look at this as the path to growth. And we'll just go into this in a little bit of detail. So in terms of, we feel that there is a lot of value to be unlocked through this whole digitization process. So if you look at the base of the pyramid, the microfinance loans, going up to, wealth management products, while we may think that this really belongs to people like us, I think there is a lot of aspiration out there, and the market is really ready to unlock and capture this value. So, of course, everyone has heard of Yaobao and Alipay model, where Alipay really tapped into a whole segment of population which started investing in mutual funds at just the press of a button. So that's really what the future is looking like in India today. People are not talking much about it, but that's really what's going to happen. So I won't go into the slide, but basically into the details, because I know it's like quite small prints. But really what this slide is saying is that, we need to look at what the different customer segments are. And there are various things. Today, there's basically the group loan, which the MFIs are providing. What's the future looking like? Is it housing loans? There is an opportunity for digital emergency loans, the likes, or digital short-term loans. Guys like Capital Float are doing. Wealth management is, UTI, Seva came together and they have been offering wealth management products. Or the semi-urban market, or the rural youth and women. Women also, there is this product called, or rather this company called Untos. Untos is a global company which basically collects data on the SMS's data in terms of the financial transactions, and at the end of the day or end of the week will inform you in terms of how much money you spent on food, how much you've spent on transportation. So there is this whole, market waiting to be captured, whether it's for the MFIs, whether it's for other new players who are going to come into the market, like the likes of Capital Float, or a Bharosa Club, which is into mutual fund investing. So that's really where the opportunity is. Yeah. This is something we've talked about, so I'm not going to spend much time, but really we are looking at digitization of collections and disbursements, and I know Payse may be here, and they've done a partnership with MFIs, and that's another model. So I won't spend much time on this. Yeah. So I think the most important thing is that partnerships are critical. Obviously, MFIs cannot do a lot of this on their own. How do they really accomplish this? And for that, I'll just take an example. We worked a lot with payment banks. And while payment banks can do some things, like they can open a bank account, they can have a savings deposit, they really can't do lending. They really can't do some of the other products, like, for example, wealth management on their own. So payment banks need partners. And who could be a better partner than an MFI who's already out there, who already is in the last mile, who already has a relationship with a customer? And, it's a combination of a telecom and online model, really partnering with an offline model. And I think the benefits could be tremendous. While we were working on a number of the business models for payment banks, it's actually, everyone talks about payment banks, what's the future? But I personally believe that payment banks have a huge future. I think if partnerships work out between payment banks and the likes of either MFIs or BCs, and those partnerships, not only them, with others, with other NBFCs, housing companies. So I think that can be really, really quite powerful, because they are reaching the last mile, may not be the last mile in tier 5, 6 towns, but they are reaching the last mile in tier 3 and 4 towns. And that is a huge opportunity which we can see. And here again, we have Payse also, a partnership with a PPI player, and wealth management. That's another partnership which you can do, like, for example, the likes of Bharosa Club or Micro Insure. They are doing a number of products in the health insurance segment. And there are other niche models, housing loans, Shubham Housing. That's an NBFC which is providing health, housing improvement money. And that could be a, very good partnership for MFIs. So really, partnerships is the way for growth. Obviously, an MFI cannot do everything on their own. And that way, they'll be able to provide stickiness to the customer, provide a range of products and services. And we really think that, a lot of investment needs to be done on this partnership model. This is on the security and compliance, and I'll call Ankur to very briefly.
So what we have seen is that, with lot of data coming in, there is a sense which have gone to the board level now from an, basically, security used to be an IT focused, delivered product, thing which has moved to the board now. I have seen so many people now talking about, something has happened, it's a reputational loss has happened, financial loss has happened just because there was a small security breach which has happened in the organization. There have been a lot of spamming, a lot of CEOs sending emails to spam emails going to CFOs for transferring money. So wherever we have this financial data coming in, the security is coming in, it's becoming a board issue. Now if we see what regulations in India, at least, we are governing, so there are not much of regulations. There is one IT Act which was somehow published in 2000, then, moved to 2008. 2008, there has been challenges where, you say that, okay, if somebody has sent some illicit material outside the network or some data going outside the network, they used to directly come in and, catch hold of the CEO. So then, this issue came in all, and then they came out with IT Act 2011, where they say, okay, there are reasonable security practices, which has to be built in by financial, not only financial, but all the organizations who are actually storing, data in their premises. This now, so what has happened? After that, they said, okay, what are these reasonable security practices? If I have a security policy in place, is it good enough? If I have a data leakage tool in place, some, tools and toys in place, is it good enough? If I have some processes in place, is it good enough? Then, organizations like DSCI, NASSCOM, FICCI, they came together and said, okay, there's a basic base standard, which is called ISO 27001, which most of the organizations are already abiding. Let's go and start using this as a base model. So tomorrow, if somebody is coming to you saying that, okay, there's data leakage which has happened, and if you say that I'm ISO 27001 certified, and I have all those policies and procedures in place, I have put in my control, it's a problem of that particular employee who was facing this, so please talk to employee and not to me. So from that regulatory standpoint, there has been a focus from IT Act. There is a national cyber security policy, which all of you know that is on the plate. You can expect this coming this year, definitely. So, overall crux is that regulations definitely are one of the focuses for security. Then, it's an agenda which gets discussed at the board level. It's no longer an IT act, or IT level agenda. And the third one is we'll have to have those policies and procedures, either it's talk about data privacy or data security in place to make sure that we are still in business and we keep on running this business adequately and securely as much as possible.
Thanks, Ankur. Fundraising. Is Dinesh here? Okay. So partner is not here, but there is a lot of activity going on in the MFI sector. Funding is a very critical area, and there's a lot of, I think, talk of consolidation. So I think this is another opportunity, and we of course work in this area, and I won't spend too much of time on this. We'll go to the next thing. Yeah, this is just to say that these are the different ways in which you can really go towards growth. So this is really just a summary of what we've been talking about. And so we are kind of done. And if there's anything, we'd be happy to take any questions on this.
Javna, thanks. Somewhere you spoke about some partnerships, and the way forward for MFIs will be to partner, or some payment banks will be to partner with them. And you spoke about diversified, you spoke about MFI, you spoke about affordable housing like Shubham, you spoke about consumer finance like home credit. Is there a precedence, or is there a partnership in your view which has already been established in the country or outside, which sort of sets up a base, or which tells us that, okay, this is a proven thing and this is something which others can sort of replicate?
Yeah, I myself have worked out some of these partnerships, talking to MFIs. There is some, I think we're not seeing much out in the market. I don't know what is public knowledge and not, so I'll just, for the moment, not say much. But there are definitely these partnerships, when we'll see a lot of it. Simply because the payment banks, while, it's great, you have access through the mobile phone, but we are a high-touch country. I mean, we need people, and that's what MFIs have got. So I think it's a fantastic opportunity to partner, to take the strengths of both these kinds of organizations and benefit both. Payment banks are not going to make money just transferring money or keeping in a bank account. And if they look at, say, partnering with an MFI, they're going to get, not a 0.2% margin. They could get a 1 to 2% margin. So I think it's a necessity. It's not a choice at all. It's a question of when and how they prioritize it. And if I were a payment bank, I would do it from day zero itself. I wouldn't wait to start the whole process and all that, because I start bleeding. So I think that's a very important segment to look at. Yes.
Sorry, Jamna, not a question, and essentially answering the question of this gentleman. So you have two examples. One is an example which you can search for, which is Citizen Bank of Ware, which is based out of US. It's a bank purchased by two Indian husband-wife couple who purchased it in 2009 and turned it around as a partnership-driven bank wherein fintechs partner with the bank. And it's just one bank branch, and it has a bottom line of 15 million, which clearly emanates only from fintech partnerships. So that's one example. Second example is essentially of M-Pesa in Kenya, wherein you have multiple partnerships originating from pure transaction-led institution, wherein you have partnership in form of M-Kopa, M-Shwari, and many more of these natures. So there are examples which exist globally of such nature.
Absolutely. Thanks. I think no more questions. So thanks so much. I know that I've kept you all waiting. The house is open for food, I'm sure, and we are all looking forward to that. Thanks, Ratna and MFI, MFIN team for a great day. Very nice day. Thank you so much.